This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Investor Connect. I'm Hall T. Martin. Today we have Tamim Abdul Majid of OCA Ventures. Tamim, thank you for joining us.
Thanks for having me. It's a pleasure to be here.
Can you tell us a little bit about how you got into venture investing?
Yeah, sure. So my history is graduated from college, ended up doing the usual route of investment banking and consulting, and then decided to go down the startup route. Founded a startup that was originally in the augmented reality marketing space. This is way back when AR was not nearly as popular as it is right now. We're talking like 09, 010 kind of time frame. We pivoted from a marketing platform into a gaming platform and learned a lot in the process, and ultimately ended up selling that company. It wasn't by any means the kind of exit that I would kind of look for in this kind of endeavor, but it was a very big learning experience and led me into the world of angel investing, and started doing some angel investing on the side. And while doing that, I was doing a master's in computer science and working with another startup in the fintech space. And then eventually an opportunity came to join OCA, and I started here, and now I manage our investments on the fintech as well as our what we call core technology, which is really consumer or enterprise focused software businesses.
So what does OCA Ventures invest in? What do you guys look for your deal flow, and where do you invest?
For sure. So OCA, do a little background. Our roots are from O'Connor and Associates, which is now a part of UBS. UBS O'Connor may be a term that some are familiar with, the asset management arm of UBS. And our roots came from that organization, which was founded in Chicago in the late 70s and eventually got merged into UBS. So during that merger, the partners of that organization of O'Connor decided to form a multifamily office, because after the merger, they were in a good position to invest some of their wealth. And that multifamily office then led to the formation of OCA Ventures as an institutional organization with not just O'Connor partner money, but also other high net worth individuals and eventual participation from institutions as well. And we had first a Fund 1 in 2001, then a Fund 2 in 2007, and now we're deploying out of our third fund, and we'll be having a fourth fund soon as well. And we invest anywhere from as low as $250K. We don't like to invest in that size, but we will do it in the right opportunities, up to about $2.5 million. $1.5 to 2 is probably our sweet spot. We define ourselves in a kind of through the cycle way of seed Series A, where you can have smaller rounds that are, in the $2-3 million range, where we're taking anywhere from $250 to $1 million, to larger rounds where, say, about $5-6 million, where we can do up to about $2.5 million. But I would say in today's definition, especially in the kind of very active market that we have, and when you look at some of the coastal activity going on, we probably get looked at more of as a seed fund in that regard. But we will co-invest in Series A's that are larger, more in the $10 to $15 million range, and then participate along a lead. So that's kind of our check sizes. And when it comes to our focus areas, because of our O'Connor roots, we certainly look at fintech. We've had some good deal flow in that space. Trade King, we were one of the early monies in, sold to Ally Financial. We have a principal-like bond trader that's called Summers that was recapped by a private equity firm. So we'll look at opportunities like that. At the same time, we also look at healthcare IT. That's been an area of focus for us, given the mass shift in regulation that's come up since the Obama administration. That's opened up a lot of opportunity for chronic care management, disease management, population management, all of those kinds of verticals. So we focus on that on the IT side. And then the largest bucket of our portfolio is really just traditional venture capital, which is enterprise or consumer focused software companies. And they can be SaaS-based marketplaces, mobile apps, whatnot. We'll take a look. As long as it's a tool that people will use and it's software driven, we will take a look.
And do you look at beyond just recurring revenue SaaS deals, or is it primarily recurring revenue that you look for?
We just exited out of, you guys may have You may have seen the deal Tenor, which was acquired by Google about 2 weeks ago. And so that was a competitor to Giphy doing GIF sharing, GIF sharing. And it was a consumer play based on engagement. And that was a good investment for us. And we certainly look at plays like that. But we're also in Spot Hero, which is a parking app some may have seen, especially in the bigger cities, which you can use to save money on parking. Again, another consumer play. But yes, we also certainly look at B2B SaaS plays. AlertLogic, which is a Texas-based company, we were some of the first money in that as well. And that's been doing really well for us. And it's a cybersecurity play, software, SMB focused. So it just depends. The right opportunity with the right team, we'll look at it. Of course, if the business is based on SaaS and that is the target model that the entrepreneur is using, we want to see a little bit more traction there than possibly just a deck and an idea. We'd want to see a little bit of customer traction for our seed deals and for the A, or let's rephrase that to larger checks, say $1 million+ check. We want to see, maybe $500,000 to $1 million of recurring revenue before we would probably get in.
So you do seed deals. What's the earliest you'll come in as far as product development and revenue? Is it $500,000 or do you come in earlier?
We will come in. It's a great question, and I always struggle in how to answer it in a clean way. We're very bottoms-up, founder-driven investors. We like to identify what the problem is that the entrepreneur is looking to solve, and what their background is, and how big the opportunity set is. And given all of that, we then come to an evaluation. So I don't want to say that we don't do pre-seed deals with the right team and the right opportunity. But typically, the kind of bell curve of the normal distribution, I would say, we tend to focus more on companies that have some traction before we invest. So that's the kind of, it depends answer is most likely, or more likely than not, we'll look for some traction, but the earliest we could go is a seed and, a pre-seed deck idea team, big market opportunity.
Well, what sectors get you the most excited these days? You guys invest in tech, fintech, healthcare, et cetera. But what gets you most excited today? Where do you think, which technology sector you think has the most legs?
For sure. I mean, some of the areas we've been looking at today, we're certainly interested in the whole mixture of data analytics, big data, whatever buzzword you want to throw, with machine learning tied to it, and especially in areas where the data set is available to be curated for the right kind of algorithms to then start generating insights as we move from a kind of predictive machine learning models to prescriptive machine learning models. And that's happening. And on the development of that technology, we're starting to see that there is value being associated in the market, not just for high-tech algorithms. I do tend to believe that with all the kind of available open source code right now that you have on like TensorFlow, OpenAI, et cetera, all these places, machine learning code is becoming more available. I don't want to say it's commoditized yet because there's still hype behind it and there's still a lot of new growth to be explored in terms of new ways to analyze data. But at the same time, there's enough of it out there that you can find and curate the right data set, create enough unique insights. There's an opportunity there. And on that basis, we certainly look at companies that can provide that kind of insight from the data that they've curated, whether that, there's some applications in healthcare that we're certainly seeing. There's also applications in kind of the industry 4.0, what I've seen it categorized as people are revamping older technology companies that have a lot of data, but have the opportunity to give a lot of data, but haven't had that done yet. So if you can collect that, you can start to get insights. IoT is another area. So some of the hot, buzzier spaces that you hear about a lot are certainly areas we are interested in. And the key is really finding within those sectors the right team approaching the right problem where there's enough data out there to generate key insights and then create a value prop for the customers that they serve, but also potentially a value prop as a data curation analytics platform that a larger buyer may find useful on the basis of just that. So we kind of look for a mixture of that, and that's certainly an area that I've been spending some time in.
So if you have two companies and they're both making the same product but one is actually taking the time to build clean, structured data sets as they go along and the other is not, what's the difference in valuation between those two companies? Not necessarily dollar, but maybe percent-wise. How much more value can you add to your company if you put the data analytics layer on top of it? Even if you're not actually running the machine learning algorithms yet, you have to build the data sets first and add the algorithms later. But what's the delta in the valuation you think is out there?
I mean, that's a good question. I think it's a little harder to dissect that on a kind of just vacuum basis because it depends on other factors of the industry, et cetera, that they're in. What I would say is that when it comes to us taking a look at companies where one has a cleaner data set that they have access to, and assuming that access has some, maybe proprietary is not the right word, but some exclusivity to it, and it's not easily accessible just by anyone, and they've done some good work, some kind of a premium that we'd be willing to pay for that. Percentage-wise, again, it's hard to quantify, but it could range anywhere from as low as 10, 20% to higher than 50%, depending on how quality is of that data. Because if they really have access to unique information that no one else does, and that insight they can generate from that once they build the actual algorithms on top of it seems likely to be very high quality, I would definitely want to pay for that. So it just depends on the situation.
What else do you see in the data analytics space that really, of course, you have to have clean, well-structured data, and then you put algorithms on top of it. What are the key success factors in putting those algorithms on top of it, or where have you found the most luck in getting a good return in that space?
Yeah, I mean, that's kind of the however many millions, billions you want to associate question right now in the market in many ways, right? I still think we're looking for the right answer to what is optimal, but based on kind of what we've seen out there, to us, like the layering of algorithms and the kind of technology that you implement is certainly important, and doing it right with the right set of data is of course important. But what we really think is critical is the kind of return on investment or return on time that the users will get, right? That's really kind of where I want to measure it from, where it's like whoever's using this data, will they find that particular set of algorithmic implementation on the whatever exclusive data that they have very valuable? And if there is insight that they can get that's very helpful, that's great. Like, I can't name the investment right now, but there's like, for example, like let's say we're looking at a company that's in the kind of healthcare space that's able to analyze and identify very in a thoughtful and effective manner that is useful to its customer base certain knowledge experts. And it sounds, when I first saw it, I was a little like iffy about like, is this really going to work? It sounds, it's like a fancy LinkedIn or something like that. But like the more we dug in and the more we checked the efficacy of it, we were we were very impressed by how accurate it is and how much help it actually provides the customers that it's serving. So that's definitely under deep consideration right now. So does that kind of allude to like how we think about it?
Yeah, that's certainly from the customer's perspective. You have to build a product that gives the customer an ROI that's meaningful, and the better the ROI, the more they'll pay for it. And so that's a great predictor of adoption and success and so forth. But I was thinking more along the lines of what applications and domains really lend themselves to it. I've done work in AI before, and I found that the systems work best when you can really define in a nice tree structure or decision tree structure the different choices that are out there, and then you can go through and program it up and find the right data sets to populate it. In some cases, you can define that very well because the domain allows that. In other cases, it's very hard. It really doesn't break down into a nice decision tree structure, and so it can be more difficult to apply. And that's where AI and machine learning struggle, is when there's not a clearly defined field of structured sets. And then, of course, finding novel interpretations of these can be really fascinating. Just by defining the tree structure, you can find many novel interpretations that give the customer an ROI. You can make a decision faster, make it on less data points or what have you. And they're always finding that North Star data set, the one predictor of X is Y. And so now we look for Y out there. Finding those becomes a key element. But just defining the field seems to be one of the key challenges. And then the next one is gathering the data that goes around it. And so I was just trying to figure out where we might find more of those, because I've worked in plenty of spaces where at the end their intuition and other things were being used by physicians to make judgment calls, and it was hard to codify in some cases. And it can be tough if you don't have a lot of good, clean, structured data as well. So whatever we're coming up with really has to have a data source that goes with it. If it's a data source we can't get very easily, then it's going to be tough to implement across the board for many clients and customers.
Oh, I agree. I misunderstood the question. Yeah, like absolutely. I mean, if you're talking about structured data sets versus unstructured and running a data analytics kind of platform on top of that, of course, right? The cleaner the data, the better the output. If you're asking me which areas specifically, I think that works better. And certainly when you look at, there's opportunities in cybersecurity, especially on like kind of the data coming in and through logs being made, and we can analyze that. If you look at application data, at certain like the app layer, when there's communication happening between app to app, certainly certain fintech plays that we see when it comes to fraud detection, there's more structured data there. All of a sudden, you start to get into some kind of lexical analysis, summaries and things like that, and it becomes a lot harder, right? One of our plays that did really well, and because of the structured nature of the data, we were able to get a very good exit out of it with automated insights. We were in their B, and it ended up selling to Vista Equity. And they had great technology that was able to basically generate outputs for their users of fantasy sports, where it would give it a kind of language as if someone wrote it about what happened to like summarizing their daily fantasy league tables, et cetera. So when they did that, it worked because obviously the technology was good, the data set was good, but also the structured data was helpful as well. So, when I see that compared to, say, someone using unstructured data, yeah, absolutely, there's a big difference. And certainly I would favor the more structured side more often than not.
Well, great. Well, we just have a minute or two left. We've talked a lot about OCA and about the data analytics applications and what you guys invest in. What else should we cover in the last minute or two that we have?
Well, I just want to say that glad to chat. And I think, I'm out in the Bay a lot, Bay Area. My wife is from Austin, so I'm in Austin as well. So absolutely would love to connect with those who are out there in your network that listen to this. If any of you are interested, feel free to shoot me a note, Tamim at OCA Ventures. So yeah, otherwise we are, as I mentioned, a geographically agnostic firm. We invest across the country, so we don't have any particular favoritism to one geography over the other. I happen to live in Chicago, but I spend a lot of my time between New York, San Francisco, LA, Austin, other markets as well. So looking forward to connecting with those who may be interested. And we are very people founder-driven fund, and we love working with our entrepreneurs and getting their hands dirty. So.
Well, great. We appreciate your taking time. We'll put that contact details in the show notes for people to get back in touch with you, and look forward to having you come back on a follow-up call and dive into more of these topics. It sounds like you guys have seen quite a bit, invested in many a successful deal, and have a lot of great experiences to share with others, both investors and entrepreneurs. And looking forward to seeing you here in Austin on your next trip. And thank you so much for taking time to talk today.
Awesome. Thanks, Hall. Appreciate the time.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.